There's a lot of panic going on right now. The panic about the coronavirus and the panic about the markets falling down. The panic about coronavirus may be valid, and I really do recommend that you guys wash your hands. Personally, I have not been going out of the house for the sake of my family, for the sake of other people. I've talked about it, how this has actually personally impacted us as a family. And I truly believe that it's better to be safe than sorry. But when it comes to the stock market, I really wanted to address a couple of things. And I know that there are a lot of people who believe truly that when the stock markets drop, it is the stock market sale and you should be buying the dip. But when it comes to it, it still gets a little bit scary. Like, what if it drops lower than what it is today? What if it continues for the next few years? And even though you've heard, like, I know that a lot of my students before, they're like, when the markets were going up, they were like, oh, isn't this not a good time to buy because markets are high? We should wait for it to drop. And now when the markets are dropping, they're like, oh my God, it's so scary. I don't want to buy. And if you're any of these kind of people, if you have these feelings, first of all, I want to tell you that it's okay. Your feelings are absolutely valid. And every investor, no matter how strong-willed they are, to some extent, they feel this fear. So don't be scared of the feelings, but I do want to take this video to show you some perspective. And I do that for myself too, because it is very easy. Like when you listen to the media, and normally when the markets drop, I actually shut off any media and Twitter because I know it's going to play around with my emotions. This time, unfortunately, I haven't, because I do want to be on top of the coronavirus, because this is something that is about health. And still, I don't know what's wrong and what's fake and what's just buzz, but this is a little bit different. So that's why I haven't been able to shut out the noise completely off. And to be honest with you, sometimes I get scared as well, but then I have to go ahead and give this perspective that I'm just about to show you right now to myself. So like, oh, okay, this is the reason why I have made this investment decisions. So today I'm going to basically address two types of people. The people who are already invested in the markets and their portfolios are down. So if it's the type of person that you bought probably at the top of the market when the markets were at the highest level, hoping the markets will continue going up, and now your portfolio is just dropping, is in the red, is in the negative, and every morning you wake up and you panic when you see your portfolio. I'm also going to talk to those people who have not invested yet, and they're kind of scared to pull the trigger and they don't know when to start, or if this really is a good time, should they wait a little bit longer. So I'm going to go deep down. I talked about both of these things with our Insider Club in the past few weeks. So I was hoping that this will also help you with your portfolios and your investment decision making for your financial future if you are a medium to long-term investor. This is not for day traders. This is for medium to long-term investors who are looking to become in control, to be in control of their financial future. My name is Kiana Danial. I'm the founder of the Invest Diva movement, a tribe of proactive women who take control of their finances and don't rely on anybody to control their money. So I would really appreciate you if you share our message with anybody in your life. And if you like this video, of course, give it a thumbs up. I publish videos every single day, whether it's about financial planning, personal finance, investing. And if you want to get those videos, make sure to subscribe and click on that bell button so that you get the notification. Now let's go and look at the markets and see what decisions you could be making for your financial future today. Okay, so today I'm going to look at the Dow Jones Industrial Average Index. Just to simplify things, of course, there are different stocks that are acting a little bit differently, and I've talked about individual stocks in a previous video, but just because I wanted to give you a perspective of the market as a whole, I'm looking at the index, and this chart is actually very, very similar to the S&P 500, which is more tech heavy. So this is what I wanted to show you. So right now, this is where we are right now, right? The prices have been going up and reached an all-time high near 30,000. and then it's been now dropping and dropping and dropping. So of course, if you were just looking at this on the daily chart, you would get a heart attack, right? Oh my God, like imagine if you bought here and it's just going down. But what I wanted to show you, first off, a more recent thing was right here. So this is literally end of 2018 as we got into 2019, and the markets had just marked their new all-time high at 26,822. And then from there, we had this massive drop. Now, of course, at this time, also a lot of people were having a panic attack, and some people were buying their way down. And guess what happened after that? The markets continued going up. So even if you had just bought at this all-time high at the time and did not even add on to your positions as the market went down, within a year, you would have been in the positive. And in a year and a half, you would have been well above where you got in. Now, of course, not everybody took profit out of that. And now the market is below where it was even before, right? It still hasn't reached the lows of that time around, which I think that it will. And that is actually this level, the 22,494 is the 50% Fibonacci tracement level. If you take a look at every market pullback, it has at least gone down to the 50% Fibonacci tracement level after it breaks below the Ichimoku cloud. So that's the reason why I do believe that the worst is yet to come. Well, I'm not the worst, but the sale, we could have more sale. I have been a little bit ahead. So the reason why I buy my way down is because we're never can be so sure. Of course, majority of times it's gone to 50%, but sometimes it just bounced back up. In case of coronavirus, we don't know what's going to happen tomorrow. Are they going to find a cure for it? I don't know. Like literally this morning, one of my friends sent me an article that an Israeli company thinks that they may have found a cure. Now, if that actually turns out to be true in a week, then we're going to see a rebound, maybe even before it reaches 22,000. If it doesn't, then we probably will see further drops. But should you panic if you are an investor who bought at the market peak? So I'm not going to tell you the answer. I'm just going to show you something that will give you perspective. And you probably are already familiar with it. But it doesn't hurt to look at it every once in a while. This one is something I was trying to show. I wrote this 2 days ago for our premium investors. So let's take a look. Let's go back and look at the markets back. And this is now the monthly chart, right? So each of these candles, it took it 1 month to make before I was showing the daily chart. So what happened in 2008, right? The markets, again, they had reached their all-time high, which at the time was only $14,000. Now the markets have doubled, more than doubled, right? And then what happened? Then the markets crash and crash and crash and crash and crash and crash. Imagine it went down all the way to 7,000. It got half in price. Now, if somebody had bought at the peak, obviously throughout this whole year and a half, the markets were dropping, they would have got heart attack if they were just chasing the markets down and they weren't sure what's going to happen. And nobody never knows what's going to happen. But if history has taught us anything, is that what goes down must come up, and vice versa. What goes up must come down. And that's the reason why we don't even buy at one set price either. We buy as the markets grow. So this is what I wanted to show you. This is a monthly chart. If you wanted to be a little bit more dramatic, I just watched The Bachelor, and all I can think of is like the dramatic stuff that can happen. The dramatic season. So this is one of the most dramatic seasons in the stock market. This is what it actually looked like on the daily chart. Went down, a little bit up, people got went down again, a little bit up, went down again, up, down, 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 down. And then once people were like, oh my God, it started going up. It broke above the Ichimoku cloud. This was the indication that the recession was over, and it was all uphill from here. right? And everything rebounded. So I want you to remember this every time that you get panicked. And the reason why I said this is for medium to long-term investors is because obviously if you're a day trader, your strategy is going to be different. And those are the people who are actually shorting. So there are two types of people who are shorting: day traders on Wall Street and people who are panicking and just selling because everybody else is selling. Long-term investors, especially after they saw what happened in 2008, understand that this too shall pass. All right, so I didn't give you, as you notice, I didn't give you a direct answer. I just wanted to show you what the markets normally do so that you can make a decision for yourself. So if you're the first type of investor, go in the comment section and let me know what you are going to do or what you have done so far as the coronavirus outbreak kind of proceeds. And now they have announced it an international pandemic. What you're doing right now, what are you planning to do? And if you're planning to buy, what level are you planning to buy? All right, how much longer are you going to wait? And are you gonna wait completely, or are you going to like buy your way down? I would love to know that. Now, the second type of people who've never invested before and are kind of curious to see, okay, is this a good time to get in? What if I get in and right off the bat, the market continues to go down for a year? And so here's for you guys. First of all, it's like the best time to invest was 20 years ago. The second best time is today. And if I was somebody who had some money, so first of all, if you have never invested before, and I've talked about this in a bunch of my videos, if you have never invested before, first off, you need to understand your financial plan, your risk tolerance. You need to figure out and set up your emergency fund and have some funds in the bank. So the money that you're going to invest, obviously, for any kind of investment has to be the money that you can afford to lose and you don't need immediately. This is not going to be a revenue generation, even though, I mean, of course, if you're investing in dividends stocks, even through the crash, you could still get paid, but that is not going to be something that you can quit your job on, and that is not investing is about. Investing is about you have another source of income and you want to have an additional stream of income through investing and have it on, you know, on the sidelines so that it grows on its own, so that its value is not depreciated as the government slashes the interest rate and just like plays with your money's worth. Because if you're putting your money just in the bank, obviously your future is going to be expensive and it's going to lose its value due to inflation. If you are not saving any money in the bank and you're just spending everything, then of course you have to first off get on to budgeting and save money. It is more important than ever right now that the markets are crashing that you start saving so that you can invest. Because guess what, you guys? I believe that this is the right time to get started. This may not be the recession that we've been waiting for, especially this being an election year in the US. I do believe that Trump is going to do, he's doing whatever he can to stop even the current drops, which I think if he just understood that this is happening for a reason, if it wasn't for coronavirus, it would have been a different reason. The markets cannot just go up. There is gravity. People have to take profit at some point. And coronavirus just created that trigger and catalyst for the markets to drop. But we were waiting for this. Everybody was waiting for this. And we saw a little bit of it back in 2018, in the 2018, beginning of 2019. And now it's happening again. And it's very, very healthy. I get very excited. I mean, yes, sometimes I panic. But then when I look at the market as a whole, I actually get excited. I'm like, okay, this is healthy. Because the markets need to go back down and create opportunities for people who want to buy cheap. I love buying stuff at a cheap price. So I do believe that this is a great time to get started. Should you wait a little bit longer? I don't know. Like I'm not Nostradamus. I don't know when this is going to end. So even though I already am invested in the markets, I am currently buying my way down. As I said, so there's a risk and reward, right? So if I wait and say, okay, no, I think the market is going to drop another like 20,000 points, whatever it is, or it's going to drop until May. That's great if it's true. But are you a speculator or are you an investor? So that is something that you really have to understand before you start investing, because speculators, they try to predict the future. Investors try to manage their risk. So I have two risks right now that I'm facing. One risk is the risk of the market continue to drop and I buying now will be in the red for a while. The second risk is that the market rebounds tomorrow and I miss out on the cheap prices that I could have bought today. So what do? I buy my way down. Of course, I am looking at how much money I have to invest. Like if I have only $1,000 to invest, I'm not going to put all that $1,000 in today. I would put $100 today and put a buy limit order the next day for a different buy limit buy level. And I just showed you before the Fibonacci retracement levels. And this doesn't obviously go for Dow Jones. I don't even invest in the index. I invest in individual stocks and cryptocurrencies. And I have buy limit orders for a range of stocks that I believe have long-term growth potential. And another thing that you really have to keep in mind, and today I'm not going to get into, but it really depends on your risk tolerance as well and your own journey in your life, like where you are in your life. Are you in your 20s and 30s? Are you in your 40s and 50s, 60s and above? Because depending on all of that, your strategy will be different and the stocks that you will be picking is going to be different. So that is like the very, very most important step that you need to take before you invest. And I've actually made a presentation about it. I'm gonna drop a link below so that you can go ahead and watch that presentation and I show you exactly what you need, the steps that you need to take so that you can invest based on your unique risk tolerance, because what I'm doing right now for myself may not actually be suitable for you. And here's a risk disclaimer. Everything that I said in this video is my personal opinion. This is not investment advice, and you should invest only based on your own education, and that is what I thrive to do. I really want you to get educated so that you become your own money manager and financial advisor, so you understand what to do with your own money, because guess what? No one cares about your money more than you do. So go get it. Go watch that presentation in the link below. It's actually at learn.investdiva.com/start. Learn, LEARN .investdiva, INVEST, D as a David, IVA.com/start. Go watch that right now so that you can get started on the right foot. I believe this is an amazing time to be investing in the market, maybe not to be alive. I don't know. The coronavirus may kill us all, but I'd rather die rich and leave some money for my kids. So that's that for today. Thank you so much for joining. Invest responsibly and wash your hands. Please wash your hands. Don't go out. Just stay in for a while. Chill and invest. I'll see you next time.